Alright man, you saw the title of the video. I am going to discuss the things that I think are going to help you get your first 10K month trading platform. So obviously this is not going to include just scaling. It's going to include like every part of funded account. So if you're struggling to pass a funded account, this is going to be helpful. If you're struggling to go from passing a funded account to actually getting a payout, this should be pretty helpful. And if you're struggling to scale from getting payouts to getting bigger payouts, this should be pretty helpful. I'm pretty much going to lay out, I'm going to talk about strategy specific things, and it's obviously going to be like ICT related. But outside of that, it's going to be like laying out a full plan and what your timeline is going to look like. Not timeline, but like what the plan is moving forward. And then we'll talk about some like funded account specific things that you should be doing and paying attention to. And then it's obviously going to be some psychology stuff, because there's different psychological factors at each step, at each point of wherever you are in funded accounts. Like I said at the start, the 3 steps. If you're either struggling to pass, struggling to get a payout, or struggling to scale. So there's psychological effects that come with all that. But yeah, man, I think this video should be pretty helpful. I think there's going to be some unique things that I'm going to mention, because there's obviously a ton of videos out there with the same title, like, yeah, how are you going to make a first $1 million trading prop firms? But I don't know. I have a feeling that the stuff I'm going to talk about will probably be a little bit more unique and probably a little bit more helpful. So we'll see. I am biased though, you know what I mean, because I'm the one making the video. But yeah, man, we'll see what's popping. Let's get it popping. Cheers to that one, and a little smooch to that one. Okay, pucker up, sweetie. Alright guys, so I actually filmed the entire video, and I just realized that I didn't put the strategy specific stuff that I said I would. So this is going to be the first clip after the intro, but just know I filmed the other part first and I forgot. Okay, so if there's like a switch and flow that doesn't make sense, that's why. Okay, but let's get into this really quick. There's really not much that I want to talk about. On chart, I think a lot of what people struggle with on funded accounts really is like psychologically related, and like just decision making after you get to certain steps of like your funded account journey. So that part's probably going to be a little bit more useful, but I want to talk about what I feel like most ICT traders make their mistakes on. And I'm gonna be honest, I am winging it, but it shouldn't be too hard to think about off the top of my head. First one, very obvious one. A lot of people who are first getting into like ICT type trading do not put enough emphasis on draw liquidity. Every decision you make should be based on the fact that this is your draw. You want the market to go here, now what? It shouldn't be, oh, okay, we entered into a fair value gap, we got an order block, we got to break a breaker block, let's get in. You're not a reactionary trader. If you want to do this at a high level, you need to get really good at understanding the draw, and that is the basis of every decision you make, okay? And another thing that when it comes to drawing liquidity is I got more consistent with drawing liquidity and more consistent with being able to call where the market goes when I base my drawing liquidity on the higher time frame. I trade on the 1 minute and sometimes even the 15 second, but a lot of my drawing liquidity comes from the 4 hour and the daily. I know that sounds crazy, but the daily, like look at the daily, and then I want you guys to go look at your 1 minute charts. I'm not gonna do it because it's gonna like cause too much delay. But the delivery on the daily is usually a lot more obvious and a lot easier to read. So why wouldn't I just base my entire day around chasing that draw on liquidity? It only makes sense, right? So if you watched the last video, you've already seen this. But Poncho, stop. Like for example, this day right here. This is where market opened. I'm sure there was London lows somewhere. I'm sure there was some relative equal lows somewhere all the way up here. You know what my draw was? This 4 hour gap. Why? Because I'm basing my draw on liquidity on the higher time frames, and look how accurately price moved, right? Next day, what's my draw? My draw is this high because we just traded into this high time frame gap. I want to take this high time frame high that we left before going into it. Very obvious draw. I'm sure there was some fair value gaps. I'm sure there was something, bro. I'm sure there was something there. My whole basis of the day is the high time frame. So I want this high. Where did we go? We went to that high. Staying in line with the higher time frames is how your drawing liquidity is going to be accurate. And like I said, the basis of all the trades that you take should be around your drawing liquidity. I feel like it's a big mistake that majority of ICT traders make when they like first start learning and getting into it. And honestly, the only other thing that I think can be like applicable to everybody, no matter what type of model you're trading or whatever, is like I said, drawing liquidity is the basis of everything you do. And then if you can understand which highs and lows are protected, that combining that with a high level of drawing liquidity honestly should be everything you need to be able to accurately read price. And then from there, it's just about finding an entry. Okay. And the reason why I think it's so important to understand which highs and lows are protected is because that'll help you. It pretty much helps you filter your draw liquidity. So I'm finding my draw liquidity. I think price is going to go here. But when I do that, like when I do my analysis and I decide, okay, I want price to go to this level down here, I also decide what a protected point in price is to the opposite direction. And the reason why I do that is because if we were to trade past that, what I believe to be a protected point, I would start to change my mind about what the draw liquidity is, because if it's protected and my draw is down here, why in the hell would we go to this protected draw or this protected higher low? It makes no sense, right? So if we do, then you have to start to be open to changing your mind. And typically, when we do go and validate a protected higher low, we do go the opposite direction. So even on days where you're technically like wrong about the draw, you can still adjust and catch a winning trade and avoid losing trades. So let me find a good example. Well, here's a good example of us not invalidating a protected low. So this low down here was a high time frame SMT within a high time frame gap when we were chasing all-time highs, right? So my draw, let me mark out all-time highs. My draw is all-time highs up here, right? So we take this high and then we come all the way down super, super deep in this range. I did not want us to come this deep into this range, but has my invalidation point been hit? No, my invalidation point is these lows because it's an SMT and that should be a protected low. Oh my God, bro. I forgot where it was. Poncho was being an idiot. But these lows were protected, so that was my invalidation point. Did that book? No, it didn't book, so I'm still bullish. A lot of people on this day got bearish because we dipped a lot further than we should have. But did the invalidation point book? No. So I was still long while everyone was starting to get bearish, and I was able to catch the longs to all-time highs. Okay, now this would be an example of the opposite. So at this point, I wanted the weekly gap because we just came so close to it and didn't book it. I wanted the weekly gap, so I wanted us to be bearish. And this day opened, and we had this high time frame SMT at the highs, right? So as I said, SMTs are normally going to be what your protected highs and lows are. I viewed this as a protected high, and I want us to short anything below it, right? Because if we're going to short it logically, we're not going to visit protected highs. So market opened, and what did it do? Absolutely decimated these protected highs. So from that point, now I can start to look at the market and be like, okay, if we aren't going to go down, what is the draw on liquidity to the upside? The draw on liquidity to the upside was previous day's high, and I was able to catch longs on these days, or on this day. So if you, like I said, man, if you can get accurate at reading the draw on liquidity, and then combine that with understanding protecting highs and lows, not only will you be able to call where price is going to go accurately, but even if you're not right that day, you'll be able to adjust properly. You'll know when to adjust your bias and your draw on liquidity, and you'll know when to hold on to it, even when other people think that you shouldn't. And I just feel like that's what majority of the ICT traders are messing up on. And then entry-specific things, I think everyone's entry model is just a little bit different, so I don't really want to talk about that. But I did talk about that a little bit in my previous YouTube video, so if you want like a little bit of stuff about that, you can go watch that. But I think that's really like the most important stuff when it comes to the technicals. So now we're gonna move to the part that I said that I filmed before this, and it's mostly it's basically like a tips and tricks for how to properly get through each step of like your funded account journey. But it honestly really is really valuable. Like I'm telling you what mistakes you're going to inevitably run into when you get to that point. And hopefully me telling you all the mistakes that happen at every single stage, you can avoid making them, because not only do they cost you a lot mentally, they cost you a lot of dollars too, okay? So yeah, man, enjoy the rest of the video. I'll see you guys later. All right, quick ad break. Not really an ad break, but I mentioned backtesting and obviously the videos about prop firms. So I feel like it's only right that I show you my recommended tools for that. So obviously the first one I'm gonna recommend is Tradeful for the backtesting site. It's my backtesting site for those of you who don't know. But I really do unbiasedly think it's going to be the best tool for you guys right now. You know what I mean? We have things that other people don't have, like the trading diary. You can test certain concepts. You can test and see which parts of your strategy work best without having to do a whole separate testing for it. So like if you want to test if you're better off trading with SMTs or not, that's just something you can do on the back end using this feature. You don't have to do a whole separate backtesting session with only SMTs to see if they work better for you or not. You can just do it while already trading how you trade. And then obviously we have like features like prop firm mode. It's not showing up because I have to create a session, but you can simulate prop firm trading through our backtesting site. There's a ton of stuff like that, and then we obviously have all the features that everyone else has. So I really do think it's just going to be the best option for you, unbiasedly. I wouldn't steer you guys wrong. But if you want to check out the site for yourself, there's a free trial in the bio. You can just sign up, and then you'll be able to look through the site and see all the features. And then if you want to move forward and sign up, there's obviously going to be like a link to purchase everywhere all over the site. So you can check that one out. And then prop firm wise, you guys know I'm back to trading on the live broker, so I don't trade prop firms, but Alpha is my recommended firm. The reason why is because, I don't know, people are going to compare it to people like Top Step. It's a little bit more expensive than Top Step. With a promo code, it's damn near the same price. But there's many reasons why I like them. The two main ones are, even the accounts that are comparable to other firms, the rules are normally better. You get more drawdown than other firms. You get 4% here. Every other firm is 3%. And then higher payout caps. No, when you take a payout, your max loss limit doesn't move to 0. It stays where it is. There's a bunch of stuff like that. And then another reason why I think they're better is because they just have more options. So there's just way more options at Top Step that are going to suit different traders. So it's just a more welcoming environment for whatever trader you are. So if you would like to, you can use Alpha Futures. Code MORE will get you a discount, obviously. And then I do giveaways weekly. So if you want to be in the giveaways, you just open the ticket in the Discord. That link will also be in the bio. And you open a ticket and show proof that you use the code. But yeah, man, I mean, if you guys don't want to go with Alpha Futures, I'm not going to cry about it. That's fine. I'm just obviously going to show you guys what I recommend, okay? So now enjoy learning for the rest of the video. Deuces. All right, man. We're going to start off with the game plan. By the way, it should be said somewhere in the bio, but I'm going to put timestamps in the bio. So we're going to cover each one of these things in depth specifically so that if you're at either one of these stages, like, you have your own section. So you can go skip ahead to whatever you need in the timestamps. But yeah, man, first thing is the game plan. Obviously lay out what it's going to take to get to the 10K a month. It's really not that complicated at all. Obviously, you can see it's 3 very obvious steps, but I'm just going to cover them in depth. So, passing a funded account, obvious first step. There's going to be certain struggles and issues that come with this first part, obviously, okay? So, I'm going to assume, because this isn't a strategy video, so I'm not going to sit here and teach a strategy, but I'm going to assume coming into this, you have a strategy that you've gotten the stats on that you know works, okay? That's kind of necessary in order to pass a funded account. If you don't, then the steps that you should take to building a profitable strategy is you can watch any videos, you can watch anybody's YouTube videos, you can, you know what I mean? It doesn't have to be my videos. Just find something that resonates with you and that makes sense with you when you look at the charts, and backtest it until you have profitable stats over at least 6 months. Preferably a year, but at least 6 months. And where can you backtest? You can backtest at Tradeful. Link is in the bio. That is my backtesting site. But seriously, I really do think it's one of the better sites that are out there. But nonetheless, backtest with whoever you want. I think you need at least 6 months of profitable data in order to say that your strategy should work. And then obviously you need to trade in actual live markets. So if you've never traded in live markets, make sure you get the profitable data first, and then demo trade for at least a month so that you're familiar with how to execute. Then you're ready to get started with the game plan, okay? So your first course of action is passing a funded account, okay? The psychological issues that are going to come with that are, this is your first time actually putting risk on to the marketplace, okay? So you're going to buy this funded account, and you're going to be thinking for the first time, there's going to be a psychological pressure for the first time of like, man, I just bought this 50K funded account for $50 or whatever it is. Like, I could actually lose money now. So that's obviously something that's like a wake-up call. But something you need to understand, okay? You are still trading demo, right? Realistically, because a lot of people are thinking about the upside. They're thinking about, man, if I pass this funded account and I make it to a payout, I could really put like $1,000 in my bank account, $2,000 in my bank account. You're not on an account that makes money. You are still trading demo until you get to that point, right? So that should be a relief. There isn't pressure to make money with the current stage that you're at right now. There should be a sense of relief, a sense of pressure off your shoulders, because it's just demo. You're just going to keep doing what you've always been doing. Just hop on, trade. And if you do have the profitable stats and you were trading profitably on demo, there should be no reason why you don't pass a funded account. It should be simple, okay? But something that you guys probably hear a lot on TikTok that I do not agree with and you shouldn't follow is full porting your funded accounts, okay? That comes after you're through all these steps that are on your screen right now, and you've done it multiple times. You only do that when you're profitable. Right now, if you've never passed a funded account, there's absolutely zero reason why you shouldn't be trading that funded account like it's your real funds. There's literally zero reason. Because you don't even know if you can pass a funded account yet. The whole reason why people who are profitable trade aggressively on evals is because they know that they can make money. So they're not going to sit here and try and pass a funded account for a month and a half, knowing that they could have spent that entire month and a half making money if they just went through the evals faster. And if you are consistently profitable, like the odds of you passing a funded account, even with high risk, are just high. Like there's a better chance that you will than you won't. So it only makes sense to trade more aggressively. But for someone who's never passed a funded account, you have absolutely zero proof of concept. There's no reason why you should be doing that. Trade your funded accounts normally, okay? But yeah, the biggest pressure that's going to come from this part is just the fact that it's your first time putting risk on in the market. I'm not gonna lie, bro. Never put up more than you can risk, right? $50 should feel like nothing. It should. That's literally 2 Big Mac meals. Like, put that up and don't even think about the money, bro. Don't think about the money that you put up, because realistically, once you pay the $50, it's gone regardless. Whether you pass or you fail, the money's already gone. So don't let that pressure be on your shoulders, because that's literally the only pressure that could come from this. If you've been trading profitably on demo, you have a profitable strategy through backtesting, you should be able to come onto this funded account and kill it. Like, there should be no pressure. You shouldn't be scared. One of my favorite quotes, I don't know exactly how it's phrased, but basically it's along the lines of like, fear and doubt come from lack of preparation. If you are prepared and you've done all the things that I said, like get the 6 months of backtested data at least, and then trade profitably on demo, you're prepared. You should be coming into this confident because you know that you did the work it takes to get the job done, okay? If you haven't done those things, then yeah, if you come into a funded account, you should feel nervous because you're being a dickhead and you're not doing the preparation that it takes to get the job done, okay? But yeah, man, like I said, risk normally, don't over risk, and keep your psychology straight. But this is, what I'm about to show you right now applies to all steps, not just the first step of just passing the funded account, but it is mainly for that. You guys should have your strategy very clear. There should be absolutely zero questions about any part of your trading. You should know your exact risk management. You should know exactly what you're looking for every single day, even if you're a discretional trader, okay? So I don't trade this model anymore, but this is a model that I used to trade, and it's very clearly laid out what I'm looking for every single day. There's no questions about it. I'm looking for the exact same things every single day. And it's still like a semi-discretional model, but you can look at this and be like, yeah, okay, he knows exactly what he's looking for. You should have the same thing. There should be no question about what you're looking for. It should be the same thing every day, even if it's just a framework. It doesn't have to be an exact model, like I said, but you should know exactly what you're looking for every day. You shouldn't be coming into the day feeling confused. You know exactly what you're looking for, top down, risk management, strategy, everything. Have this laid out before you start the funded account, okay? Because that's an issue that a lot of people run into as well, is they think they have a strategy and they think they have a model, but if I told them to lay it out on paper like this, they couldn't. They wouldn't be able to do it. So make sure you have something like this, because it's just going to give you some clarity. It's going to give you some peace of mind knowing that you don't have to think too much, because you're just looking for the same thing you've looked for yesterday, the day before, and the week before. You know what I mean? But yeah, that's all I think is needed and what should help you get past the funded account. Like I said, this isn't a strategy video, so I'm not going to give you a strategy. But those things, that preparation I just gave you, take that to heart, bro. You should be that prepared to go into your funded account. Okay, now with earning your first payout, this video is going to be a lot of psychology, because like I said, it's just not a strategy video. But this part is going to have a lot of pieces to it, okay? So the first one I want to get out of the way is the drawdown, bro. Like, I feel like a lot of people don't understand. You should be utilizing every bit of drawdown you have. And I'm going to give a good example of this, okay? So a lot of people, what they think, and if you've never been on like a live funded account yet, you probably haven't experienced this yet, but you probably will. When people get to a point on their funded accounts where it's like they're down more than half their drawdown, they start thinking recklessly. Like, they're starting to think like, man, I'm probably going to blow this anyways. I might as well up my risk so like I can potentially get out of drawdown on this trade. I promise you, bro, stick to the same risk the entire time. Even if you're down to your last trade, if you're risking 0.5% and you only have 0.5% drawdown lift, stick to it, bro. Trust me. I'm gonna tell you a story, okay? I had a stack of funded accounts, five top sub accounts. I had a stack, and I was trading like trash, bro. I got to the point where I had one trade left. It was less than 1 hour. I think I had like 500 risk left. And I brought that account all the way back into profit and took 2 payouts on that stack, bro. So, like, it's never over until it's over. There's a reason why you get allotted that drawdown. It's so that you can utilize all of it, bro. So stick to your risk management. If you defer from your risk management, you are no longer trading your strategy. And if you aren't trading your strategy, you don't know if you're profitable. Because as I said, before you should have even bought a funded account, you should have had the stats that prove that your strategy is profitable. Because taking that and moving forward and trading with that just gives you a lot of confidence. And it's not even just like, it's not even about the confidence. It's the fact that it's irrefutable confidence. Like, some people can come into a funded account and they can feel confident, but if they haven't done the prep, then they're just delusional. They're just stupid. But if you come into it and you did do the prep and you have the stats that say what you do is profitable, then you know that as long as you execute exactly how you're supposed to and how the plan is, you're going to be profitable. And if you're not, then you know that it's a fault at you. It's not a fault at the strategy. That's why you want to do that prep, because if you are trading like trash, or the strategy isn't getting the results that you'd expect from the data you collected, you know it's not the strategy's fault, and you know it's your fault, which means it's something that you can fix. That's the importance of that, okay? But yeah, that's a big one that I feel like a lot of people sleep on. I know it's a funded account, so it's like, oh, if I lose one, I can get another one. But when you're at the start, bro, trust me, utilize all that drawdown, because you can easily make it back even if you're on your last trade, bro. Exactly how I did. 2 payouts from that stack, and I was on my last trade. Okay, now let's talk about building out your buffer, okay? Don't take your payout too early. I know a lot of people, my friend just did this to get his first payout. A lot of people want to take their payout too soon and don't leave themselves enough buffer, so they like pretty much guarantee that they lose the accounts after they take their first payout, which I guess isn't like, it's not the worst thing ever, because it's kind of like the point of funded accounts. It's like you're supposed to make payouts, and your payouts should just be bigger than what you spend on fundeds. And, getting your first payout is an accomplishment. So getting it out of the way, I'm never going to be like super, super pissed at that, but you want to trade properly, bro. So when you're on a funded account and you're working towards your first payout, you should be fully building out your buffer, because you want to be able to take as many payouts as possible. You want to put yourself in the best position as possible, right? So fully build out your buffer. I always build out 3%. So it doesn't matter what account you're on, what size account you're on, what firm you're with, but I always build out a 3% buffer. And then when you take your payout, you can take literally anything above the 3%. Okay? That's how you properly earn your first payout, because then you'll be able to take it, and then you'll have an equal chance at getting, actually an even easier chance at getting your second payout than your first payout. But yeah, that's another big one too that I feel like a lot of people skip past. You like, even though funded accounts aren't necessarily for longevity, you want to give yourself the best chance possible at longevity with the accounts, because the more payouts you pull, the less money that you have to spend on funded accounts, and the higher your ROI is, which is exactly what you want. And then when it comes to the trading in order to build the buffer, it's the same thing as the downside that I mentioned. Like, when people are down half their drawdown, they feel like they have to get reckless and start risking more to build it. A lot of people feel the same way about building their buffer, because they're like, yeah, I mean, the quicker I build this buffer, the quicker I can just get to my payout. Like, I'll only full port, or I'll only risk heavier until I build my buffer, and then I'll go back to normal risk so I can get my payout. That is stupid, okay? As I said before, if you change anything about your strategy, if you change anything about your trading, you are no longer trading your strategy, and that includes risk management. So if your risk management plan said to risk 0.5% and you risk 1%, you are no longer trading your strategy. It's not the same stats. Your profitability will change. Like, the win rate and risk reward average doesn't matter. You just change your strategy. You are no longer trading your strategy. So if you change your risk during your buffer, sure, it could go your way. But if you watch my last video, like I said, man, if you are risking more to increase your upside, you are equally increasing your downside. So if you're increasing your risk to win quicker, you have a chance of losing quicker too and blowing that account. It's not worth it. I promise you. I know you're thinking like, yeah, man, I mean, like, my win rate's pretty good. Like, I can just win 2 trades and the buffer's built. I promise you it's not worth it, bro. Just trade normal with your normal risk. You'll get to your payout as long as your strategy is profitable. Okay, now, what to do with your first payout. This is probably going to be a hot take out of me, and I personally think it's a smarter take than what most people say. When you get your first payout, do not take the entire payout and buy more funded accounts. Literally everyone tells you that. Everyone says after your first payout, use it to buy more funded accounts, get more accounts. Guys, I promise you, bro. I promise you that is not the best way, and I'm going to explain why, okay? There's multiple reasons. The first one, you aren't psychologically ready to scale that heavy yet. You just aren't. With more accounts comes with more, it just comes with more stress and more psychological strength that is needed in order to stay like sound and keep doing what you're supposed to do. If you just got your first payout, do you really think you're ready for that? No, bro. Probably not, okay? And another thing too, I mean, you can not necessarily lucky. You can't get lucky and get your first payout, but like you could trade like some ass and just get fortunate moves out of the market and make it to your first payout, right? So you'll think that you did what you're supposed to, and you think that you can keep getting payouts and whatnot, when realistically you just went on a good streak, even though you were trading like trash. So you're gonna go buy some more funded accounts, spend every dollar you just made out of your first payouts to go buy more accounts, when realistically you aren't ready. You went on a lucky streak even though you didn't trade that well because the market was just moving super good. And now you're not only going to blow your current live account, you're going to blow hella evals. And now you're right back where you started or even deeper in the hole because you're going to keep buying evals. Don't do that, bro. If you can make it to a second payout, then I would say that's means to prove that you have something that can make money, for sure. Most people don't make it to their first payout, but really, most people don't make it to two payouts on one account. Most people don't do that, okay? So if you can do that, that means you definitely have something that works in some sense in your hands. And at that point, I think it makes sense to use the money that you've made to go buy more accounts. But even then, bro, like I said, even if you have all the money in the world to scale at super heavy and buy like 10 accounts, trust me, bro, trust me. Do not buy a ton of accounts, okay? Do not use all of your payout money. If you like got a decent sized payout, don't even use half of your payout money, bro. If you have one funded account and that's what you got your payout from, maybe buy an extra one or two. So then you have like 2 or 3 accounts total. 3, if it's your first time scaling, 3 should be the max that you scale to. And I know what you guys are thinking, bro. I know what you're thinking. It's like, but if I'm gonna pass the 3 and I'm gonna get a payout from the stack of 3. Why wouldn't I just get more accounts? Because then I could do it with 5 and it's more money, right? It's easy math, more trades, it's more money. Yeah, bro, but can you handle 5 accounts? Are you mentally ready to handle 5 accounts? You don't know what it feels like till you get there. Trust me, bro. Another thing that I said in the last video. My last video was a banger, bro. Another thing I said in the last video, bro. Trying to scale before you're ready and trying to do things before you're ready is what is going to murder you, bro. Because for an example, right now, you just got your first payout and you want to scale. You think that you're ready because you got your first payout. So you're going from 1 account to 5 accounts and it took all your payout money. But you weren't ready. You're not ready yet. You should be scaling at a certain pace, but you decided, hey, man, I'm that nibba. I'm going to skip 3 steps, get me all the way up here now. I'm ready. You're going to delete all your progress because you're trying to scale quicker, which obviously requires more money, and you're not ready, and now all your progress is gone. And not only is your progress like objectively gone, now your mental is gone. Because imagine going through everything that you just went through to get your first payout, and then you just blew it because you tried to scale. And now like you're now, like I said, objectively the money you made is gone, but your mental is fucked. So now it's gonna be even harder to get back to getting your first payout. Trust me, scale slow, bro, because it's gonna seem slow now, but the growth that you get from trading is exponential. So take it slow. I promise you 2 to 3 accounts, if you're actually going to get payouts off of them, is plenty, bro. It's plenty, okay? But yeah, that's all the psychological stuff that comes around getting your first payout and what comes after, you know what I'm saying? Now, I mean, I did touch a bit on stacking fundeds from the last one, but there are a few more things that I think comes with it. As I said, man, don't scale too aggressive. That's something that held me back way more than it should. Was just buying a ton of accounts just because it's like, yeah, bro, like easy math. If I have 15 accounts, I'm gonna make 15 times more money than if I only had 1 account. It just doesn't work that way, bro. If you're not psychologically ready, it's not about the 15x anymore. You're gonna lose more trying to do that because you're not ready. But yeah, when it comes to stacking funded accounts, bro, there's a few things that people say on TikTok as well that I really disagree with. A lot of people say the more accounts you have, the less contracts you should use. No, dude. No. The whole point of buying more accounts was so that I can make more money. That was the whole point. So if you were on a 150K account when you had one account and you got your payout, or you got two payouts, because remember, I said you should get two payouts, bro. But I mean, do as you please. But you're on a 150K account and you were using one mini. That's what you were using, and that's how you got your payouts. When you get two more 150K accounts, just because you have more accounts, that doesn't mean you should start using 5 micros. Use the exact same size, because as long as you can mentally detach yourself from the fact that it's like, oh my god, I have 3 accounts now, you'll understand that it really is the same thing as just trading 150K account. Like that's the reality. So if you were able to have proper risk management and maintain and have some sort of longevity risking one mini on 150K, you'll have the exact same longevity and chance of getting payouts using one mini across 1,000,000 accounts, 100 accounts. It's the exact same thing. You're just copy trading what you were already doing. So I really heavily disagree with that. I don't think you should be de-risking. I mean, if it's gonna help with you psychologically, then maybe do it for a little bit. But if you need that to help you psychologically, then you just aren't ready for stacked funded accounts. Okay, that's another thing too. If like going into a set of stacks, like if you're getting multiple funded accounts, if you feel like you have to do something like that, like if you feel like you have to de-risk to keep yourself good mentally, then don't do it. You're not ready. Like you're not ready. And the only way, which you guys probably aren't going to like because you're probably nervous to stack funded accounts, but the only way to become ready to trade a stack of funded accounts and use proper size, like I said, for the example, one mini, the only way you're going to be ready to do that is to do it. It's the only way, bro. The only way that you're going to get over the fear of doing something is doing it over and over and over again, because then it just becomes regular life and you realize it's not as bad as you thought it was, right? But yeah, man, I mean, when in terms of stacking funded accounts, there's only so much you could say. It's pretty straightforward. You stack the accounts, but there is a psychological effect. I mentioned, you know what I mean? Don't stack or scale too quick. That's what is going to absolutely destroy you. And yeah, man, the psychological effects that come with it and how to handle it. The unfortunate reality is the only way you get over mental hurdles, well, and those type of mental hurdles, is just by doing it. It's like, I don't know, bro. Like, imagine you got a job as a skydiving instructor and you were scared of heights. The only way that you're going to be able to skydive is by doing it over and over and over again, because then it's just natural. It's just what you do. It's what you do on a daily basis. It's the same thing with these stacks of funded accounts, bro. You're not going to get used to going from 1 account to 3 accounts without just doing it. And if you failed the first time, not a big deal. You already got your payout. And like I said, you didn't scale too hard because you earned 2 payouts. You made sure you earned 2 payouts, so make sure you're ready. And you didn't go and use every last dollar of your payout money to go buy 10 accounts. You only bought 1 or 2 extra ones. So if you fail, it's unfortunate. It's not favorable. But at least you did it, because now you know what it feels like to be in that environment, and you can constantly adjust as you try again. So, yeah, man. I mean, I would hope that you guys find this one helpful. I feel like people, like, you know what I mean, when they have videos like this, they're just looking for, you know, they're looking for like a strategy video. Like, they want me to come on and give them a strategy that's going to get them to 10K a month. But realistically, obviously, if you didn't hear my voice and you just look at the screen right now, it's like, okay, like this is obvious. This is obviously the path to getting your first 10K a month. But you have to really listen to the stuff that I said in between. Because I feel like a lot of people are going to watch this and look over it, but they'll, like, if people watch this and look over it, they're going to run into every single hurdle that I just said, and they're going to look back to this video and be like, damn, more trades warned me about this. That's the whole point of this video, is I'm pretty much giving you guys like every single mental hurdle and every single mistake that most people make when they get through each stage of this before you have to run into it, so that hopefully you don't have to deal with it. Because, bro, the feeling of fucking up funded accounts because I wasn't prepared and losing a ton of money for no reason hurt. It sucked. It hurt a lot. The feeling of being on a live account multiple times and not being able to get my payout because of all the mental hurdles that I told you and all the mistakes that I made, that I mentioned while going through this, hurt a lot, bro. That hurts a lot. Literally getting teased with my payout and I can't get it because I keep doing a bunch of dumb stuff. You guys can avoid all that by just listening to what I'm saying right now and applying it when you get to those steps. Bro, especially this one. This one's probably the heaviest one because like it makes logical sense to want to scale as heavy as possible once you have a proof of concept. But most people, when they're on an uptrend of just doing well and everything's going their way, they don't really think about, okay, well, what happens if this doesn't go my way? So that's when they end up, you know what I mean? They buy 10 funded accounts using all their payout money and they get shit on. But you always have to think about, it's not even about being like a pessimist or anything. It's just about being a realist. Like, yeah, I'm going to assume that things are going to go my way and they're favorable towards me. But if they don't, what is my downside? And am I okay with that downside? Me personally, if I'm getting my first 1 or 2 payouts, I wouldn't be comfortable with the downside of me losing every single dollar I just made. I would know it would fuck me mentally. You know what I mean? So, yeah, man, that's why I'm trying to warn you guys about what's to come before it does, so that hopefully you don't have to deal with what I did, bro, because trust me, it hurts a lot, okay? But, yeah, man, hopefully this is helpful. Honestly, now that I'm thinking about it, I probably should have just recorded this video on my camera. I thought I was going to go to the charts for some reason, but we literally just look at this the entire time. But it's all the same thing, you know what I'm saying? But yeah, man, let me know in the comments what videos you guys want to see next, because I do want to start making some beginner videos, but I feel like a lot of you guys aren't beginners. But I mean, if I'm trying to grow my audience, I guess I should start making that type of stuff. But well, let me know what you guys want to see in the comments, bro, and I'll be making every video you guys say. Okay, doses.